I've explained endlessly that you should always expect a 50% correction. And if you get away for less, you should be happy. A feature of these crypto markets is excessive leverage, particularly in Asia. So if you see where a lot of the liquidations happen, they happen on the Asian exchanges, where Asian traders tend to use a lot more leverage than they do in the Western world. So as price action starts pushing lower, it starts liquidating lots and lots of positions. So that's really what we saw. We saw a massive liquidation. I mean, Ethereum saw a liquidation of the entire sharp up move that we saw. And it all came, at one point today, when I was up this morning, Ethereum was down 42% on the day. Now, if that was the stock market, this would be one of the biggest, most scary crashes of all time. But this is the crypto market. This is the crypto market that is a 65 to 100 vol asset. The 2017 bull run is a great example, had something like 6 or 7 35% correction. Now, the 50% correction that we've seen in Ethereum and Bitcoin is larger than most, but again, not unusual in a bull market, and particularly not in the kind of spike down volumes. This wasn't a crunching, disgusting, long grinding bear market. This was a panic liquidation. And that always leads me to, what do you do about this? What should you do? Well, the first rule, and I've explained it time and time again, is don't use leverage. So then if you didn't use leverage and you were in ETH this year, for example, you're still up 250%, even at the bottom of the sell-off. It doesn't matter that much because these things go up exponentially and they correct sharply, but they still are on this exponential rise. So you should be compensated by the returns for the risk that you're taking, i.e. a 50% pullback. And that seems to be the case. Both Bitcoin and Ethereum still remain up on the year, although Bitcoin's had more of a kind of topping pattern over a period of time. Has anything changed for me? Nothing. Where's the flow of funds? Well, interesting enough, the first movers in the institutional space are in. The conversations I've been having with a lot of the bigger institutions is, yes, we've agreed we need to do this, we need to clear our paperwork with Fidelity or Coinbase or whoever it is, we need to start setting up accounts, we need to figure it out, we need to get our risk systems in place. So that wall of money that I refer to is still there. People understand in this space, if your time horizon is multi-years, then you can't be overly concerned about the path that it takes. So what I want to do is go through some of the technical charts that give me comfort to show why I don't think it was that big an event, even though it felt terrible. So here's the basic chart of Bitcoin on a log chart. Remember, we need to use log charts in these assets because they're exponential assets. And here's the trend line, and Bitcoin beautifully kissed the trend line. So now you would say Bitcoin has gone back to trend and is now free to rise higher. I also love to use regression lines, which give you 1 and 2 standard deviations versus a trend. This is the regression of Bitcoin from the low in March. And what it did was actually it broke through it, but bounced back above the 2 standard deviations oversold. Bitcoin's about as oversold as it's ever been. It's certainly as oversold as it was in March. And if you were to be able to deploy capital in this market and you still believe in the long-term story, which I do, then this would be the time you'd be buying and not selling. And that's a typical feature of markets like this. You need to be buying over time, looking for these sell-offs to give you an advantage to add in. Ethereum was even more dramatic today. There was a huge liquidation as the entire bull run from April got unwound in one day. But if you can see the little tick on the right, I mean, it hit below 2,000 and it's currently at about 2,800. So, I mean, that's a 40% rise from the low, which alone would be a good year in the S&P. Now, it's still down significantly, about 20% today. But again, it bounced here off the 200-day moving average and also off its small trend line from the December low. And again, these are the kinds of signals that tell you that the market reached the oversold point and has probably finalized where it needed to go to on the downside to flush out the excessive leverage and the speculative hubris that sometimes builds up in assets like this. Don't forget, network effect assets are driven by behavior a lot of the time. And so human behavior tends to be quite volatile. So these assets are always volatile and tend to do stuff like this. Ethereum, with its regression channel on the log chart, actually got less oversold, only one standard deviation, and it's currently resting on its average trend line since the bull market started in March. So we got oversold first thing this morning, US hours, and we're now back to average line, and we should be again looking to base from here and start building a pattern where we can start rising. Another way of looking at it is how oversold did it get? It got incredibly oversold that the RSI hit the equal lowest level that it's done since March. And those levels have always seen bounces. So again, this is the kind of area you'd be looking to add on the dip. And my final killer chart for you is here's the Bitcoin price now versus the Bitcoin price in the 2013 bull run. It is almost an exact fit. And that suggests that these kind of pullbacks, and if this pattern continues to repeat, there's no guarantee, then it's going to tell us that we've got the bulk of the rise ahead of us. At this point in 2013, it actually rose 10x. Now, could this correction last a bit longer? For sure. Could we reach a new low? For sure. But you can see the risk reward is balancing in the favor of this thing now basing and then rising over time. I'm not showing you the chart, but I've also got a chart of Ethereum versus the Bitcoin bull market of 2017. It's roughly the same thing. And these charts are telling us that something like 400,000 is the upside in Bitcoin and 20,000 plus in Ethereum. I think they may even be overshot in this bull market, but that's the size of the risk and the opportunity here. If there's a 10x upside and a 50% downside, well, that's a hell of a risk reward. So that's why markets like this, they're hard, they make everybody feel terrible, but they also shake out some of the bad, weak protocol coins, some of the bad DeFi projects. They shake out people who have taken too much leverage and shouldn't be doing it. And what it allows people who are patient capital is to accumulate at the right prices.